I keep 100% of my net worth in Bitcoin, every single dollar. Most gurus call this insanity. I call it the only real security, and I have the math to prove it. But I learned this the hard way. In 2016, my Bitcoin doubled. I thought I was smart, so I sold everything. I treated the most revolutionary money in history like a cheap stock. I was blinded by the financial dogma: invest and diversify. But the conclusion was harsh. Everything I knew about money was wrong. Diversification isn't a safety net. It is a statistical trap. And that is the first reason I went all in. The market calls it risk management. Peter Lynch calls it diversification. The logic is simple. Why sell your fastest horse to buy mediocre assets in the name of safety? You only guarantee that your returns converge to the average, and the average is mediocrity. As Warren Buffett says, diversification is protection against ignorance. If you've done your homework, it is just a tax on your intelligence. Andrew Carnegie said the opposite. Put all your eggs in one basket and watch that basket. Michael Saylor knew this. He used the system against itself. He took on cheap dollar debt to buy Bitcoin, effectively shorting the dollar to go long on the apex asset. Instead of diluting capital, he concentrated. Since then, he outperformed every giant in the S&P 500. Diversification preserves wealth. Concentration creates wealth. But to concentrate, you need conviction. You need to understand why Bitcoin is different. There is a hidden tax on your investments. Compare the S&P 500 against the money supply. Historically, they grow together. Your profit is only nominal. It is disguised inflation because trillions of dollars are created out of thin air. It is basic math. More money created for the same amount of wealth devalues the dollar itself and prices rise. Fiat money is a leaky bucket. Bitcoin is the antidote. Absolutely scarce. There will only ever be 21 million. Scarcity is what protects your time. That's why when price drops, I don't see panic. I only see a discount. But how do I know it's not a permanent crash? Traditional markets struggle for 10% a year. Bitcoin averages over 100%. This is still the monetization phase. We are watching a technology superior to gold in scarcity, portability, and divisibility. The greatest asymmetry in history, deflationary money, with adoption at internet speed. It is not too late. Less than 8% of the world owns Bitcoin. And here is the math of conviction. The Kelly criterion shows that when your edge is this high, betting small is a mathematical error. The only rational move is to maximize exposure. If the dollar is doomed, why hoard painted paper just for safety? Now, let's be clear. Don't swap everything tomorrow. I'm not a financial advisor, and I still use dollars, but I follow Gresham's law. Bad money drives out good money. So I spend the bad. I hold the good. I traded a system that punishes savers and addicts you to the short term. For one, that rewards discipline and long-term vision. I'm not blind. Bitcoin isn't perfect, but it is the best exit we have. That is why 100% isn't risky. Risky is storing life energy in money programmed to melt away. Risky is trusting a system that steals from you to survive.